Listen, sorry to interrupt, but it really is important for us. If you can just hit the like and subscribe button, that allows us to bring you the very best financial intelligence and the best guests on the planet. Anyway, appreciate it. Like and subscribe.
Hello out there. Welcome to another edition of Macro Mondays on the eve of the long-awaited US presidential elections. We are here to give you all the latest in global macro and to perhaps look a little bit ahead at what's going to happen after the election. I mean, everyone's talking about who's going to take Pennsylvania, who's going to take Iowa, who's going to take God knows what. Let's see how you can make some money on that, Andreas. Welcome to you, Andreas Steno, my usual co-hosts. Great to have you.
Good to see you, Mikkel Rosenvold, as well.
Yeah.
So, Mikkel, as you can see, I've donned my Dickies cap today, and the purpose is to look like a voter from the rural parts of the US. But I'm actually in studio today in the middle of Copenhagen, while you're stuck in the rural parts of Denmark, which is like 15 minutes away from
Copenhagen, you would probably call it. But okay, fair enough. As you can see, once again, I'm from home. I'm not at work this day, but that's how it is. We're going to have a lot of work this week with the US election coming up.
Yeah.
A lot of crazy stuff going on. I mean, these final days of the campaign is complete mayhem with lies and fake news all over the place. One great story that you highlighted for me, I hadn't actually seen it, is that of Peanut the squirrel. Apparently, a world famous squirrel. I didn't know this squirrel called Peanut has more followers than you, Andreas. This squirrel was seized and euthanized by authorities in New York, and apparently was investigated more than any single Epstein client, as Elon Musk lies here. Do you have more insights into the Peanut the squirrel gate?
I think, was it a raccoon that was also seized? It was one.
Exactly. Yeah, and one of them bit a police officer. It's a bit unclear whether it was the squirrel or the raccoon. I'm not. It's. I probably have more of them up here than you do within the city. But anyway.
But I've never heard of anyone having a pet raccoon before. At least not here. But
yeah. Hey, I hope you're enjoying the episode. If you want to dive deeper and really dig into what's going on and how to understand it, then grab my Everything Code PDF for free. Just hit the link in the description below. You're going to love it. I'm sure it's going to really help you.
There's a first time for everything.
So we did the big macro Sunday with the great Raoul last week.
Yeah.
And I try to make a point that even though we can shit all over the EU on regulation, lack of investments, lack of innovations, at least we have these bottle caps. Now it seems, because we've sent our laureate to the States over the election, it seems like that has even come to the States. I mean, what's next? I thought this was a purely European thing, but apparently, our good friend Mikkel Rosenvold showed us this.
Yeah, he even texted me that he got a paper straw earlier today as well. So I mean, the US is lost.
What's going on?
Yeah.
It's done.
The election doesn't matter anymore.
Where are you going to go to? Bangladesh? I mean, where do you have to go to escape all this shit? Yeah, I don't know, Andreas.
Oh.
Great stuff. We'll touch a little more on the election a little bit later, Andreas. But I mean, you don't have to look very long on Twitter or news feeds to get coverage of the U.S. election. So we'll try and keep that to relative minimum here.
Yeah.
And try and focus on global macro. I think that's much needed. Perhaps, Andreas, should we start on Friday with the last Friday? Obviously, the non-farm payrolls. What were your reactions to this?
That was a shitty report, basically. And we kind of knew that up front, even though the consensus was around 100K jobs. We got much less than that. So all of the green dots on the chart here depict what happened in October relative to the light blue dots from September. And, job creation is just down all over the place. Also in services, also in manufacturing, you name a sector, and it was down. But remember that the sample period for the non-farm payrolls is just around the 12th of the month. The hurricane in Florida peaked, I think it was on the 11th of October. We had a strike ongoing with Boeing. We also had strikes within the motor vehicle space and all that. So, I mean, it is obviously impacted by that. Even the BLS, so the Bureau of Labor Statistics, had to communicate that they had no fucking clue. I mean, we knew that already, but now it's out in the open. It's been a mess with these non-farm payrolls numbers for a while, but I'm still puzzled when I look at the market reaction because come weekend, we had an increase of roughly 10 basis points in the Treasury yield after this. Okay, let's try and deduct what happened. Assuming that weather-related events and strikes maybe add up to, say, 70 or 80K jobs. We would have gotten close to 100K jobs. But 100K jobs is a terrible job report. So, I mean, had we gotten 100K in August, as we roughly did, we would have seen a major reaction towards buying bonds, expecting the Fed to cut 50 basis points at a time and all that, blah, 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 right? And now we got the opposite. So what on earth is going on in bond space? I sound
What's driving the yields, yeah.
I sound a little bit upbeat in a negative way because we bought into bonds a few days ago and it has really been the best of starts to that bet. Also because of what happened in the UK, Mikkel. So everything has been wrong with this bet so far.
You posted this. Good old Liz Truss. Obviously, she was even shorter in office than, I think one of the shortest reigns as Prime Minister. Rachel Reeves, the new Chancellor of the Exchequer, with a speech that was intended to accommodate markets, drive investments, and caused the FTSE to tank essentially last week. A horrible job they did according to markets there. Very, very poor outlook. Is this what's driving bond yields as well?
Well, so I think there's something happening beneath the hood that we need to be aware of here because, I mean, this budget speech last Wednesday, sure, it wasn't picture perfect, but it was far from a Liz Truss 2.0. Far from it. I know they intend on adding 30 billion sterling in stimulus, unfunded, by the way, so they will have to issue debt to throw those 30 billion at the economy. But in any case, I mean, they're actually trying to rein in spending. They're trying to balance the budget over time, and I actually think they did an okay job. But right now, given how liquidity is, given how repo rates trade, you cannot say anything just barely supply positive, meaning that you hint of upcoming supply and the market will just go bananas. And it's kind of the same in the Eurozone with the Bund also acting as something has changed completely. The Treasury market is acting weird. So what's going on here, Mikkel? I think we need to spend 10 minutes on this because it's, I got 50 or 100 questions on Friday after this labor market report. Why on earth is the fixed income market not responding to this weakness? And it's because of a lack of liquidity. If you move to the next pages, I've tried to look into this issue because this was the exact chart we used. If you go back to the oil chart versus the 10-year Treasury yield to say, okay, something is actually brewing here. Inflation is coming down.
Gap is opening.
Gap is opening. So the oil price has been a perfect leading indicator for 10-year Treasury yields, basically 18 months in a row. But something is happening right now. We see a major disconnect. And let's see whether that continues. I sincerely don't hope so, but who knows? The point here is something is driving this disconnect, and I think it's related to a lack of funding availability for those repoing treasuries, bunds, guilds, etc. And it's actually a very dire situation if you look at it across the board, and it's the same across all of the G3 countries. There's a lack of available liquidity. There are too many bonds, and when the price of the repo increases, you're stuck in a situation where it's not particularly attractive to repo these bonds as collateral, and therefore you get fewer people holding them. This is a very, very good chart and very telling in this regard. So it's the liquidity index on U.S. government securities created by Bloomberg. So it's kind of a measure of spreads in the secondary market. So the bid offer basically between the bid and the offer in Treasury space. And that index basically moved towards new highs over the course of the early autumn, probably related to a lack of liquidity in the market. Again, this is telling for a market where those typically absorbing excesses, such as primary dealers, the banks, right? They cannot absorb it right now. The repo market is not doing well. And I think it's related to liquidity. So here's my ultimate take on this. We need central banks to step in soon, and this is very close to the moment that we've been talking about for a long while. They cannot sit on the sidelines watching this for long. Take the example of the dollar liquidity measure here. We're still stuck below 6 trillion. As I've said 2 or 3 weeks in a row, I expect that liquidity addition to be right around the corner because they have to. We're starting to see these signs of weakness from the bond market, from the repo market. It's exactly what they try to avoid on a running basis by having a lot of liquidity in the system. And therefore, they will soon come to the conclusion that liquidity is not abundant anymore. Which is what we've been waiting for, Mikkel, in many ways. Yeah. And I can guarantee you, as soon as they acknowledge that, you'll see the ramifications in crypto, in NASDAQ and all that, right? But for now, it's, we don't know whether there is a very, very bad short-term period coming up before they take that decision. That's probably my honest and transparent answer to this right now. And if you move to the next page, Mikkel, I think it's even more evident if you look at it in Bunds, so German govies. This is the asset swap package of the Bund. And for those of you not familiar with that concept, it means that you buy a Bund and then you pay in the interest rate swap with the same maturity profile at the same time as an asset swap. So you're basically betting on the spread between the Bund yield and the 10-year euro swap rate. And as you can see, we've basically entered territory we've never seen before. The interest rate is basically the same on a Bund as it is on a 10-year euro swap. That's extremely out of the ordinary and very telling for the demand for Bunds, because this is a result of a lack of demand for Bunds relative to the swap. And yeah, as you can also see, it doesn't take a doctor degree to see when you see such developments. 08-ish, around crisis times, we saw some weird developments around 2011, 2012 in this as well. So, when you see stuff like this, it's not comforting. It really isn't. And again, I think it relates to the liquidity picture. We have the liquidity chart from the Eurozone on the next page, Mikkel. I know I'm ranting right now, but allow me.
No, absolutely. It's incredibly interesting.
We're 1 trillion euros down versus exactly 12 months ago in available euro liquidity. The ECB is doing QT still. They're actually still on a path to sort of trying to ramp it up. Absolutely crazy, if you ask me, given what's ongoing. So let's see whether they will. I think they will be slower than the Federal Reserve to respond to this. We can get to the upcoming week in central banks, but liquidity is tight.
But just to understand this, Andreas, why is all this happening? Because we've talked about the Fed switching its focus from combating inflation to combating unemployment. We've talked about the Eurozone reaching its inflation targets. Why are we getting caught offhand by this?
Because they haven't changed their path on liquidity and balance sheet developments yet. So they do QT in the UK, they do QT in the Eurozone, they do QT in the US, and they intend on doing so until they see stuff like this happening. That's exactly what they've been telling us for a while. They track private repo markets, they track liquidity abundance in the banking system as 2 gauges of whether they've done enough. We're getting there. That's the overwhelming conclusion from this. But it's a trial and error approach. They intend on doing QT until it's no longer possible to do more, and we're here. And I've said it 3 or 4 weeks in a row, especially after the quarter turn around 1st of October, which was nasty, very, very nasty. I said that was your first clue that we were getting close to some sort of pain threshold, and here we are. We are at a pain threshold now, because otherwise this stuff wouldn't happen.
So to understand this, do you think if we hadn't had that major inflation scare, the cost of living crisis, would they have turned these charts or turned the policy around sooner, like in the end of 2023, before we ended? Because this seems like extreme levels compared to what we've seen before. So it's a matter of fear of renewed inflation waves, or what's been going on?
Yeah, I think you're right. It could be related to their fears of adding to liquidity again. Amidst inflation not being back at target. But you should also remember that what happened in 21 was basically the biggest liquidity event since Noah. I mean, they've never added, you've never seen so much liquidity at the same time since Noah had to collect all the animals, right? I mean, they obviously had to withdraw parts of that again because, everything turned into complete mayhem in 21 because they added too much liquidity. Now they're probably removing too much liquidity again or doing it too fast or whatever. They have to stop. I mean, could they continue doing this in a system with less debt and all that? Yes, sure. But that's not the situation, right? So I think we're very, very close to some sort of pain threshold here. And I've said it, Q4 is roughly the timing where they will have to turn around, maybe even this week. I'm not ruling that out. It would be a little bit of a hot potato politically to do it, but why not?
Yeah. Absolutely interesting. Just to touch upon this like this as well, this is days before and after 1st of October of previous years. Will 2024 follow the pattern to see decreasing yields over the coming weeks, or what do you expect?
This is the term premium in towards the end of the year, and last 3 years in a row we had bond yields coming down because of a smaller term premium. If you had asked me on Thursday, I would say an overwhelming yes. We need to see some action from the central banks to get this pattern back. Remember exactly a year ago, Powell said on October 19 that if term premiums rise, we'll act, and he could say something like that this week and certainly end the frenzy. If you scroll back a chart, Mikkel, or two, we have the Treasury General account, and this is the one from the Eurozone. They don't have a lot of idle cash that they can throw into the system, but they do have that in the US. If you look one slide further back, there you go. So they have 850 billion. Worth of
they have some ammo in the US to turn this around,
and they need to use it. Obviously, with the debt ceiling upcoming, they have a perfect excuse to use it. So why not? I mean, this could sort of alleviate some of the pressure on the Federal Reserve, because this would be a decision taken by the US Treasury, but they could bring down their holdings and then allow banks to receive these dollars, and it would help a lot. So let's see.
What are we going to do in the Eurozone then?
Wait and see, right? That would be the typical Frankfurt approach, Brussels approach, right? Okay, let's see what they do in China and the US first, and then we'll respond to that. But in the Eurozone, we simply need to end QT as well. I think that's...
It has to come.
Yeah, it has to come at some point soon.
Do you want to talk election or Fed meeting next, Andreas?
Oh, yeah. Maybe let's do the election first, because the timing of this Federal Reserve meeting is really a bastard, basically. Do we even have a result when they communicate the interest rate decision? They postponed it 24 hours to be more certain, but I'll allow you to unpack the election, Mikkel. I have no clue after watching the weekend's polling here.
I mean, we've talked about this poly market, but both it being sort of the meme of the election, a main driver of many articles. Trump has been tweeting this all the time. Elon Musk a little bit less so the past few days. Essentially, we got Trump up almost at a 70% chance of winning the election. As we mentioned on this show, that was too high. There was a bubble, in my opinion, which is what can happen in these sort of markets. I don't have to tell you that, Andreas. it seems to have normalized a little bit, much closer to 50-50 on some of these sides. I think it was predicted actually had Kamala in front due to some very, very strong polling in Iowa, among other places. So essentially, Andreas, as we've been talking about, this looks like a coin toss to me. Kamala may have the edge in some states, but we still essentially don't know if the pollsters have all sort of flocked on a built-in fear of underestimating Trump again. That's essentially what I'm thinking here. They're very, very scared of once again underestimating Trump in the polling. So there is a chance that they have actually toned or dialed down Kamala's numbers in these polls a little bit, and that might be what we're seeing now. Some effects of. Essentially, we don't know. We have no clue who's going to win. Could turn another way. It's still within margin of error space for each of them to have a runaway victory. It doesn't necessarily have to be extremely close. It doesn't have to be that close that you need to watch individual states. But it's going to be really exciting, Andreas. To see who wins this.
Mikkel, looking back at the 2020 election, right? And I spent all night, European hours, on the trading desk. And I recall the first couple of hours being everything turned in favor of Trump. And then you had all the mail-in ballots and all that shit, which basically led to that whole, narrative around could we even trust the numbers and all that. But Biden slowly but surely won back territory during the night, right? Yeah. I guess that effect is smaller this time, substantially smaller, but it's still there.
Should be.
Still there. And remember, you need to remember that, take the example of Georgia or Pennsylvania, whatever. You obviously get some of the big numbers coming in around the big cities last during the night. So again, my impression would be that we will be sitting 24 hours saying, okay, Trump is very much in the lead, and let's see. I don't know.
Yeah, it's going to be incredibly interesting.
It will be volatile.
We may, during the night, get some indications as to this polling effect. How have they pulled in another direction? Have they been spot on? We'll see. It's because it's very, very hard to call, and that's why I think some may have overbought into the Trump win, also in markets. But so. Could be a correction in that direction. Let's see, Andreas.
I tend to agree, Mikkel, but you don't need to look back further than the 22 midterm election, right? The Democrats outpaced all polling, right? So it's tricky.
Yeah, and you have to remember we had this discussion of in another show as well, Andreas, that people who invest in poly market, they have skin in the game. That's a completely fair point. So they have every incentive to get these probabilities right. But the polling companies, they have a lot of skin in the game as well, because if they fuck this up, as Fro would have said, they're not going to be getting any business for the next 4 years. I mean, the polling business is already a really, really bad reputation, and another fuck up wouldn't do them any favors. So we'll see. To me, essentially a coin toss. I don't think there's really anyone who can gain an edge on guessing who's going to win this election. The parties may have some internal polling which is of better quality than what's publicly available, but it's not really a place where you can be smarter or have a time advantage on markets, in my opinion.
No.
So perhaps a matter of turning off and getting back into markets afterwards.
Yeah. I tend to agree, but you can look at the probabilities, you can look at what happened in markets, and I think there was a clear fear of a bond market riot should Trump win this election. If Kamala wins, that bond market riot is annulled for now, in my opinion. But you need to gear up for some volatility in bond markets should Trump win. And I'm not saying this as a political statement, it's just, we've already seen the first glimpse of it, and he's seen as a bond supply guy. Yes, just have to admit to that.
Yeah, and I think for most people, perhaps we it sounds strange to say, but we have some kind of idea what we're going to get with Trump on the economic policy. I mean, Kamala has released some economic policy, but it's very vague. It's very unclear how she's going to impose these price controls, the price gouging bans, etc. So, I mean, that's for me going to be the big question if Kamala wins. Do anyone really have an idea of where this is headed? What can she get through Congress, etc.? So, yeah, we're going to have a lot to talk about next week, that's for sure, Andreas. I just wanted to touch on some other events next week, both in the US, Europe, and in Asia as well, perhaps, Andreas. Another cut at the Fed interest rate meeting?
Yeah.
25 basis points? What do you expect?
So, 25 basis points. The dark horse is whether they end QT. So, I mean, 25 basis point, that's carved in stone. In my opinion, they cannot do anything else but exactly what they promised us. It's a way too controversial timing to try and rock the boat here. 25 basis points, get on with it, end QT. That would be, ending QT, that's, it's official eve. No one knows what it means. So they can do that without really upsetting anyone. So, they can add stuff like that. But
that's not a political thing. But.
No, and on the interest rate policy itself, they will have to do the 25 basis points that they telegraphed in September, because everything but would be a completely... it would be too controversial to me.
Yeah. I just wanted to address, just to pause quickly on it, because every morning we do an investment call with our team and go through our macro regime models. Just a second, here it is. So this is the current macro regime development for the United States. What struck me here is that almost all these probabilities are at 50-50, or 50% chance of them rising. What does this tell us? How do you invest from this? Just to give some glimpse into your thinking on this, Andreas.
Okay, so we've got 3 very well documented probability models developed by scientists and what have you. And what they're telling you right now is that we have no fucking clue what's going on, right? And, that's kind of the honest answer here, right? It's 50-50, right?
Yeah. It's almost like they know there's an election coming up. I mean, it's the same way.
If anything, I've been sort of tempted to say that it looks like we're at some sort of peak stage for growth and inflation, but like from a momentum perspective, but it's not crystal clear right now. I think it will be much, much, much easier to deduct the macro regime in 30 days from now, hopefully. And that's why I concur completely with the view that I've heard from a couple of good investors. We just need a result, if you know what I mean, from this election.
Let's get past this shit.
Yes, let's get past it and move on.
And just to understand this, Andreas, we've talked about a lot about this liquidity tsunami coming on. We've touched upon it this week as well. Why does this model not factor in that in the probability of rising liquidity?
So remember that this is a nowcasting model. It tells you exactly where we are as we speak. So there's no forecasting element to this. This is just a gauge of where we are amidst the moment, so to speak. And it's been increasingly difficult, in my opinion, to try and look a lot forward, especially on growth and inflation. On liquidity, I spent the first 10 minutes stating that I'm 100% sure that it will happen soon. So, I mean, you could obviously add some forecasts to this, but what I can assure you is that as soon as liquidity starts rising, you'll see it immediately in this model, and then you'll get increasingly convinced to follow it, if you know what I mean. So my point is just, sure, there is some value in trying to be early on stuff, but it's actually pretty okay to just trade the trend when it's there. And that's what this model is designed for.
I just thought that was a good way to explain this model. We're going to be posting a lot more of this stuff on Real Vision if you're a subscriber there as well. So go ahead and check that out. Andreas, I just had a picture of Reeves. I just wanted to put this. Do you remember this lettuce? We already talked about Liz Truss, but I couldn't help myself. She didn't outlast the lettuce. Can the Bank of England remedy this next week? The Reef speak, not the lettuce thing.
No, I wouldn't have an answer to that at least. But we're not too far off the levels where they had to intervene back in Liz Truss days. So, and again, I don't think this is a Liz Truss 2.0, but this time around they're actually doing QT. They're the liquidity in the UK bond market is terrible and all that. So I think at least they'll have to respond to it to some extent. When this Truss sort of fueled this complete bond meltdown, it wasn't because they had to do a lot to stop it. I mean, they just backstopped it rhetorically and said, okay, here's the line in the sand and we're going to defend it. And then, that was kind of it. So maybe they'll do the same. I know we have a PM who would be very happy if they did so. We had a discussion.
Very good for the mood in the office here.
Yeah. It was a really, really weird week in gilts, and I think during the first 15 minutes of that budget speech, gilt yields dropped 15 basis points or so, and everything looked like okay. They actually reined in spending, and then she said a few words, and the forecast profile for interest rates next year and stuff like that was released, and mayhem after that.
Andreas, one final topic before we round this off. We have to talk a little bit about China. No election going on out there. They do that kind of shit, but they're free of that. But they have the Standing Committee of the National People's Congress. So essentially the Politburo, the managing board of directors of China meeting, expected to pass some kind of fiscal stimulus package. Do you think we'll be positively or negatively surprised out of that, Andreas?
Tough
question.
We've played headline hockey or bingo briefing or whatever you go, briefing bingo from China in a couple of months in a row now, and it's been annoying to trade China because, it seemed like a trend was sort of in place, and then all of a sudden you got a new press release via Reuters or whatever, and everything turned upside down again. I have one strong opinion on China, and that is related to the stimulus headlines that we get on a running basis. You can get back to how the Chinese system works, Mikkel, in relation to events like this and what the NPCSC meeting is actually all about. But if you take a look at the chart on local government funding in China, this is off balance sheet debt, and this is measured in trillions of yuans. So they have a little less than 70 trillion yuans in off-balance sheet debt, these regional govies. They typically add to their debt, or they typically did, because they don't do that to any extent longer, via LGFVs, so a local government funding vehicle. It's an off-balance sheet item bought by banks mainly, but could also be bought by asset managers. And the whole purpose is to keep it off the balance sheet. So in many years, at least those not following China closely, said, okay, the debt situation is actually pretty okay in China because it was off balance sheet, right? But this number is taken from the People's Bank of China's own accounts. So we know that it's roughly correct. And the lighter gray bars, they're equivalent to the development in this off balance sheet debt item from regional governments should the entire stimulus wallet be used to swap that debt into new issued official government debt. And when I read like a little bit between the lines of what was published in Reuters last week ahead of this meeting, they explicitly stated actually that this new debt will be used to help regional governments bring down their off-balance sheet debt. So in my opinion, what they're going to do is that they're swapping debt for this new issued debt. No new money.
Centralizing debt, essentially.
Yeah, no new money at all. It's one big scam, this headline, in many ways, because it's not stimulus if you don't add money. Okay, it's on the margin. It's good news. It's probably a bit cheaper to borrow officially. You'll get it on balance sheet to avoid some confusion and some uncomfortable questions from investors and all that. But you're not adding to the money base, and that's very much what they need to do. So I think it is exceptionally underwhelming what we're seeing from China. And I think it sounds like something written by a marketing agency rather than a political bureau.
Yeah, absolutely. I mean, what I think is happening, I mean, if you're trying to imagine Xi Jinping as a, what's it called, a PE teacher, I think the American term for this, in elementary school, he's got a team of students and he's trying to get everyone over the finish line to get to that 5% goal. He's like, come on, everyone. All out effort to just get above that 5% target. He's not going to do anything about it himself. He's going to try and pump a little bit of money into the local governments to get them to push the economy on, because essentially he's been used to setting a growth target, pushing it out to the local governments and saying, okay, you got to deliver this amount of growth, and if you don't have any plans, just borrow some money and do it. That simply doesn't work anymore. So he has to alleviate that debt burden of the local government so that they can deliver growth. So we're still not at the point, we've talked about this before, that China is dipping its toes into some of the policies that we've been used to in the Western economies, stimulus economies. They're still not at the point where Xi Jinping is handing out money left and right. That's probably what it's going to take to really get this going. So yeah. Let's see what happens. I mean, I think we mentioned 6 trillion yuan as the initiative. The highest estimate I could find was 10 trillion yuan that would be part of this fiscal stimulus package. That's a lot of money, but does it really help that much if it's over a couple of years? Yeah, I tend to agree with you here, Andreas. It's a very tricky situation out there for sure, and one that's going to take a lot of time to work themselves out of.
But it's been very tempting over the past couple of months to try and buy China, and all of a sudden it looked like there was some momentum behind that case, some sort of uniform message from the Chinese authorities to the Western investors and all that, and especially given that the two sides in the US have been yelling at each other like it was a banana republic, it felt very comfortable to maybe take some decisions to put some money outside of the US. My best piece of advice would be to calm down, hope for a clear election result, and then the US will still remain a much better investment case than this marketing agency debt swap crap. Yeah. It's crap. Honestly.
Absolutely interesting. Any last words on positioning trade ideas? You want to get over the finish line, Andreas?
No, let's talk about that in a week, Mikkel, because, we still have a couple of bond trades on our books.
Let's see.
But we need some aid from the central banks now. We've got, crypto and long tech bets on as well. So it hasn't really been a good end to the week last week. And I may end up selling my car and all that shit if we don't get a clear election result. Fingers crossed. Please vote someone in if you're watching this in the US.
Yeah,
that's please.
Yeah. Don't fuck this up. I mean, to all our American listeners, have a great election day, election night. Good luck on that. I'm not the type of guy to encourage people to go voting. Sometimes I like it when fewer people vote. It means that I have more power if I'm voting myself. Or that. But anyway, have a lot of fun with that, Andreas. We're going to be covering that all night, obviously, on our own webpage through Real Vision and on social media. It's going to be really exciting, Andreas. Thanks for joining this time. I'll see you next week.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.